What's up everyone, welcome to a new video from PerFinEx, the #1 English speaking and independent financial planner in Germany. Today we got a late Christmas present for you guys, because there were huge dividends paid out to all our investors in December. One investing strategy just got a couple of cents, and another investing strategy got more dividends than ever before since we started our community investing. You'll see for yourself. But before, let's come to our agenda, so everybody who's not interested in certain parts of this video can skip with the timeline in YouTube to whichever part you're interested. Today we'll start with some important to-dos. Let's go. Good news, everybody with a German tax ID gets 801 euros of capital gains completely tax-free. And that number will probably increase to 1000 euro per person in 2023. That's what the new government promised. They promise a lot of stuff, but I think this is really gonna happen. Kids have a tax ID too, so they get also 801 euros. So everyone who opened a kids account do the following twice. Once for your account and once for each kids account. Log into your Fidelity investment account, click on Taxes, Steuern and Freistellungsauftrag. That's the German word for the 801 euros free of capital gains. And then it probably looks like this for you because you have nothing activated. So click on Anlegen. Then this window opens. In the first box you can select if you want to give Fidelity your full 801 euros or 1602 euros if you have a joint account. And with the second check mark, you can also give Fidelity less in case you want to split your 801 euros across multiple banks. And then type in 1st of January 2022. And in the second box, click the first check mark, which basically means the amount you gave Fidelity is valid until you tell them otherwise. The third box is a little tricky. You first must click on here, which is the underlined word, and download the document before you can click the check mark. Then click Abschließen, sign it off with a TAN, and enjoy your capital-free gains. Deadline to do this for 2021 is end of January, so log into your Fidelity account and do this. Speaking of capital gains, let's start the year with some good news. Usually Germany wants more and more and more taxes every year, right? So I was fist bumping when I read the news that there will be no Vorabpauschale in 2022. Wait, what's a Vorabpauschale? There are ETFs and mutual funds that pay out their earnings, dividends, rental income, whatever. And then you as the investor has to pay 25% capital gains tax on their payout. There's also ETFs and mutual funds that keep their earnings and reinvest it so the value of the investment rises. In this case, there's no taxes. Lawmakers declared this unfair and introduced the Vorabpauschale, a preliminary tax, in 2018. Lucky for us investors, and that's the reason why this is in the pro-investing news today, the Vorabpauschale depends on the base interest rate of the German Bundesbank. And since that base interest rate is minus 0.45 for 2022, there will be no Vorabpauschale, because your earnings that you get as payout times a negative number would result in a negative number as well. So zero, because we're not getting any money back from Finanzamt by investing in investment accounts. We would need a pension for that. If you like to use this zero tax in 2022 and would like to join our investment community, then check out the link in the description to open your own Fidelity investment account. Completely online in just a couple of minutes. Coming to the not so positive news. There's still one topic that is dominating the news and scaring global financial markets.
Inflation.
For the 6 months in a row, inflation in Germany is rising. We're at 5.3% now. The highest price increase in almost 30 years. In last month's video, we had 5.2. So you could say it at least slows down a little. In last month's video, I also told you that central banks around the world have to react to this super high inflation at some point. And that's what they did 2 days ago. The American Central Bank, Federal Reserve, released their meeting notes this Wednesday, so 2 days before this video, basically stating that if this high of inflation continues, they will rise interest rates faster than planned. 3 times this year, 3 times in 2023 and twice in 2024. And they also said that if this is not enough, they could do more interest rates increases than that. On top of that, they also want to tighten their balance sheet again, which is probably a good idea. I mean, look at it. At least every second US dollar that exists on this planet was printed over the last 2 years. Let me repeat that because it's an insane statistic if you think about it. Half of all US dollars that ever existed are younger than 2 years, because the Fed printed and printed money from around 4 trillion in 2019 to more than 8 trillion today. So it's a completely logical and good idea to do what the Fed is planning. That's also what I teach my students in my economics class in semester 1 of bachelor's. Still, for some whatever reason, it has markets worried. And everybody started selling. That's what you'll see with the investing strategies in a minute, starting Wednesday. But we're smart, so we are not worried. Only if you want to finance real estate. Then you might want to hurry a little bit before central banks around the world start increasing interest rates again. Let's talk about our investing strategies. Our high safety strategy is the investing strategy that shouldn't lose more than 15% from its peak. And that's why we invest about 80% in bonds and 20% in stocks, worldwide in more than 5,000 different companies. It looks like as it's down this month, but it's actually not, because I told you there were huge dividends paid as Christmas present for you guys. High safety investing strategy is up 2.1% since August in capital gains, plus 1.8% in dividends paid. So 10,000 euro invested at the start in August last year would stand at 10,224 euros right now, plus dividends. And if you think 60 euro dividends in September was a lot, see what Santa Axel had in store for you in December. High safety investing strategy got 124 euros in dividends, twice as much as in September, paid out to you guys who invest in that strategy. Merry Christmas! Now let's see the most popular passive income strategy. Idea behind this investing strategy is obvious, right? We invest in companies all over the world that pay a reliable dividend and a worldwide real estate portfolio for rental income. Last month, this investing strategy was down in capital gains. This month, it's up big time. Invest of minus 5 euro capital gains, we stand at plus 380 euros capital gain 1 month later. I don't know about you guys, but I like these videos a lot more when the return is positive. Ironically though, the passive income investing strategy got the lowest payout in December. 10,000 euro invested in August would have paid the incredible amount of 84 cents dividends last month. Don't spend it all at once. But you got almost plus 4% in capital gains in 1 month, so I think you can still be very happy. And lastly, our high return investing strategy that invests in a worldwide portfolio of more than 2,500 growth stocks and megatrends, all kinds of stuff with really good outlook going forward. Last month we were down a little, this month we're up a little. Even though it shows red because of the dividends that were paid out. Kind of the same as in the high safety investing strategy. 10,000 euro invested at the start in August would have returned plus 4.4% in capital gains and 0.7% in dividends. You can see your Christmas present here with about 25 euros in payout. If you want to join our investing community, check the link in the description and open your Fidelity investment account completely online in just a couple of minutes. And when Fidelity has set up your account, which takes them usually 1 or 2 days, we will reach out to you to determine the right investing strategy for you. Take care everyone, and a lot of capital gains for all of us in 2022.